afternoon, everyone, and welcome to Stock Market Today. Ali Corm and Ed Carson here with a look at what went down in the market this week and a preview for what's ahead. And Ed, what are the couple of stocks that we're going to be taking a look at?
And we're going to take a look at DocuSign, PayPal, and Lululemon, all trading around the 50-day lines.
Okay, well, we'll get to that first. Let's take a look at the Nasdaq on Thinkorswim from TD Ameritrade here. So on Friday, we saw the Nasdaq gain 0.2%. And that was the only major index higher for the day. The Dow down 0.2%, the S&P 500 down just a smidge, and the Russell 2000 down about 0.5%. But all in all, really great to see the Nasdaq holding up so well after a week and a half previously just going gangbusters.
Yeah, it's like been 2+ weeks, and ever since that 50-day line test, had a really nice move up. Yeah, really impressive. I mean, there's such a difference. I mean, if you can't catch the first day or two of a rally and the last day or two of, or you're going to give up a day or two of rally, when we've had these 5-day rallies, you can't get anywhere because, you end up with, you can't really make any gains in that environment. So even just a couple of weeks means all of a sudden you can at least capture a good chunk of the gains. Like if you sort of think of that, a market like a loaf of bread, you're not going to eat the heels. But if you got a big loaf of bread, you're fine. But if you're stuck with just one, the heels, you're not going to make anything. So nice action for the growth stocks, Nasdaq, but growth stocks in general.
Yeah, investors are probably starting to make a little bit more progress in their portfolios than they had been over the last couple of months. So that's a look at the Nasdaq on the daily. Let's see what clues we can find here on the weekly chart. So 2 big blue bars here in a row. It's not something that is we haven't seen. We've seen it along this big run, but where do you think we are now? Does it feel like we're at a point where we could be coming in a little?
I mean, it's possible. I think, the NASDAQ isn't that extended from its 50-day line, actually. I think it's just over 4% or so. So that's not so much. It wouldn't be surprising to see the growth stocks, and maybe take a look at that a little later, but that they've had such a run that it wouldn't be surprised to see a pause. But man, it was really nice. It's like, I don't even think it, because even with that last run that we had a few months ago, it was still a little spottier and there's still more sector rotation, and it didn't feel like some of the growth names did as well. This one really has felt strong for the kind of stocks that, we often follow here.
And it has been quite a while since we've seen a period where it's been more up than chop. So maybe we could be at the start of a new strong trend like that. We'll have to see what we get. And now let's move on over to MarketSmith so we can check in on the S&P 500. Looks like more of the same, Ed.
Yeah, more of the same. Most of the gains came on Monday with Apple. Saw that with the Qs as well. But, it was still moving up. It was a modest gain this week because some non-tech sectors were sort of sideways or down. But, nice movement.
Okay, and the Dow here, it's kind of in this trading range here, below highs from a couple weeks ago, but still holding the 21-day line. So it looks like it's acting fine.
It's acting fine. It's not leading for sure. You can look at that RS line. It's been lagging for a while, but you don't expect the Dow to lead that often.
And small caps, looking at the IWM, some nice performance this week, flipping on over to the weekly. So on the heels of a 5% gain last week, seeing a gain of 0.7%. So continued improvement. It seems like continued breadth, which if a lot of the stocks that we've been focusing on as actionable are now extended, we need that breadth to continue so we can continue to see buying opportunities. And
yeah, that's a good
right?
point. Maybe some chip gear names are coming back. There's all these housing and financials and industrials that are sort of hovering around buy points. So if you see that continuing to improve, you're going to see more stocks, a broader range of stocks.
And yet another signal of the kind of market that we're in for growth traders is the performance in the IBD 50 ETF, FFTY, up 5% this week. Last week, gaining 6%. So 2 strong weeks here, really underscoring the strength once again in growth stocks.
I think this really explains it even more than the NASDAQ, because you can't even see with this chart you don't really see that big move that the Nasdaq made a few months ago. I mean, and there were growth stocks that worked, but there was just a lot. It was tricky. There were some that worked and some didn't. It was just hard to make headway unless you just happen to be in, the right specific stocks. Now you're seeing finally, say, like a real move. It's like, okay, just across the board in growth, just a lot of positive action, just easy to make gains. You can sit and enjoy those gains.
Yeah, we were talking about how it was better to take profits more quickly during this period. I feel like that also kind of explains the thinking there. Breakouts not really working, or if they did, it was kind of short-lived before we started seeing things pull back. So now a little bit more harmonious action and moves to the upside that are sticking, at least for now. Well, let's take a look at DocuSign, because we had earnings out late Thursday. So up for the week, 3%, double the average turnover from a volume perspective, gaining 5% for the day. A pretty decent close here, Ed. And I guess this is one that really exploded a couple months ago, but more recent entries were a little tricky for this stock.
Yeah, I mean, that like this was a sort of typical of a lot of those names that sort of ran up and then hit this chop, and it was just difficult because every time you thought you had a buying opportunity, that's when it would pretty soon roll over. So, this was interesting. It was nice action. Then it got above, that got it actually entered, got above there. There's all sorts of things. I mean, you could draw 4 different buy points off the 50-day line, off that trend line, off of that. There's the flat base that isn't, so it closed above most of them. It was nice action, huge volume. So that's different from some of the choppy action. I mean, maybe there's some real meaning in here. There's the earnings. So this is one you probably would have wanted to buy early. I was too gun shy because I've seen this go up and down so much. And I have got enough exposure, so I decided not to. But this was nice action and nice close, really.
Yep, and added to leaderboard last quarter, and there's back to the IBD 50 ETF. But
we really want to show that, yeah.
But yeah, stick it in your mind. But we added it to leaderboard off of the last earnings reaction and a more recent entry as well. With the average cost basis, had about a 13% cushion heading into earnings, warrant holding it. Yeah. But for those who maybe had a more recent buy, less cushion, or even if you did have a big cushion, nothing wrong with taking some profits heading into the report. But today, a buying opportunity, as we mentioned, all the various buy points added to swing trader today. So that also notable as well. DocuSign, a leader in the enterprise software group, and yet another impressive earnings report. We'll have to see where it goes from here. And if we could take a quick look also at Shopify, as you mentioned, similar action over the last couple of months after a big move in May and June, started getting a little choppy in recent months, but it's finding support where you would like it to, right around that 50-day.
Yeah, and it's just sort of had a bit of a head fake on Thursday where it sort of cleared sort of a little consolidation. You have that little trend line that you can sort of have there. And then it's sort of trying to get back above it. So it could still work. It's just been tricky in that environment, but definitely one to be watching.
And we've been talking about early entries. So when Shopify moved back above the 50-day line on that TikTok news, potentially an area, a little bit of an earlier entry for you to get in on Shopify there. And moving our focus now to PayPal, PYPL up 1.3% on Friday, up 3.9% for the week. So getting back above that 10-week line, closing 1% above that level. So with PayPal being a long-term leader, a good sign to see it back above the 10-week.
Yeah, it had disappointing results or mixed results. And but this week, I think there was talk that they might get into stock trading, and that seemed to give it a bit of a lift. Nice to see the sort of like base on base or base next to base, as Arusha likes to call it. If it, you could buy it off of this, as it rebounds from the 10-week line. Maybe if it gets above like this past week's high, it'd be great if it could form a handle. I actually did the measurements, and as long as it doesn't fall anymore, this handles above the midpoint. But if it goes any lower, it's probably too low. But it still probably work as an early entry, just as a way, either as an early entry or as if you wanted to start or add as a long-term leader, because it tends, long-term leaders tend to find support around those levels.
Yes, good entry there. And Lululemon, our third stock that we're looking at, that's hanging out right around its 50-day line, but earnings due next Wednesday. And for Lulu, we've seen some above average volume declines in this pullback to the 50-day line, Ed.
Yeah, it wasn't very great action this week. I mean, it was not, you want to see a pullback in lighter volume, maybe a little more gentle still on the price. I mean, reverse lower from an all-time high. So, it doesn't look much better on a weekly. In some ways, it looks worse. So above average volume heading into it. It's down below the 10-week line, maybe not convincingly, it's not decisive, and there's still support from a couple of weeks earlier. But with earnings coming in on Wednesday, it depends on where you bought it and how much cushion you have. I mean, you might have a little bit of cushion from that last buy point, but not much. There's not much of a cushion. So you just have a decision to make coming up. I mean, but if it rebounds off of earnings, it might present an buying opportunity. But right now it's a sort of a tricky. It's obviously a big test right ahead of earnings. So sort of like you got two tests in one day kind of situation.
Do you know if it's before the open on Wednesday or after the close?
I'm not sure, but I think it always comes in after the close.
After the close. Okay, so we have Tuesday because we don't have Monday. Yeah. We have Tuesday and we have Wednesday. So maybe a little bit of time to make the decision there to see if you have enough cushion, depending on the expected move that the options market is pricing in. That's, one thing that you can take a look at, how much cushion you have. Somewhere between 5 to 10% is what we usually like to see. But the ultimate test, like you said, is coming soon for Lulu. And now in terms of what investors should be doing next week, what do you think, Ed? If investors have been upping their exposure in recent weeks, maybe analyze their portfolios, see what's doing well, maybe feed those a little bit more if they are presenting add-on entries and trimming back some of their other holdings. What do you think?
I mean, it's always tricky. I mean, look, if you have some laggards weighing on your portfolio, you might want to cut them. It's always just good to evaluate that, especially when things aren't trading, so you can be a little calmer about it. It's a little easier to be objective. But also, yeah, with some of your winners, I mean, if there's look for opportunities to maybe add on to them, or you might, as Scott St. Clair says, if the ducks are quacking, if it's getting extended from their, some of the short-term moving averages, you might feed some profits into it. But you should also consider just hopefully you added exposure, and probably a lot of that exposure came into growth stocks because that's what was working. But you just have to, don't buy those extended, and, work on those watch lists so you can find maybe in other areas like that are sort of hovering around buy points, but haven't really moved in the past couple of weeks.
Right. And another thing to note is be prepared for any scenario. We've seen 2 very strong weeks. Seems like we have the wind at our back. We could see more strength, but you also have to be prepared for another pullback.
Yeah, I mean, it's amazing how quickly psychology you can lock yourself into bullish or bearish mentality. You really can't do that. I mean, it's like, well, it was good last week, but that was last week, and maybe it'll keep going, and that'd be great. But yeah, always be flexible and let the market tell you what's going on. Don't tell the market what it's supposed to do.
Right. Well, I guess I'm gonna go eat some bread, Ed. But anyway, hope you all have a great 3-day weekend, and the team will see you back on Tuesday. I'm out all of next week, but I will be back on, I guess it's, what is it, the 12th, 13th? Anyway, 4 days off, but I'll be back after that. And see you then, everyone. Have a great weekend.